as the AI boom sends chipmaker stocks soaring, shares of SKhainic's have surged, making it South Korea's largest company by market cap, overtaking Samsung Electronics. For more on the domestic economy, we're joined today by Professor Park Min-jung, professor at the Department of Business Administration at Kumoh National Institute of Technology. Professor Park, thanks for coming on today.
Thank you for having me today.
So this is the first time in almost 3 decades that Samsung Electronics has lost its position as Korea's most valuable company by market cap, right? Is this simply a reflection of the AI-driven semiconductor boom, or does it signal a more fundamental shift in the industry's competitive landscape?
Yeah, the SKhainik's rise to the top of South Korea's market capitalization ranking should not be simplified as a short-term result of the AI semiconductor boom. It also signals a shift in the basis of competition in the semiconductor industry. The immediate driver is clearly the rapid growth of AI server demand and the expansion of the HBM or high bandwidth memory market. SKhainic's has been highly valued because it has secured a strong position in HBM and also built close supply relationships with major AI chip customers such as NVIDIA. More importantly, semiconductor competitiveness is no longer just about production scale and cost efficiency. In the AI era, it increasingly depends on customer co-development, yield stability, advanced packaging, and fast transition to next-generation HBM products. SKhainix has gained strength in these areas. However, this does not only mean Samsung Electronics is in structural decline. Samsung still has a broad portfolio across memory, foundries, system semiconductors, mobile, and customer electronics. Therefore, this change is best understood as a market revaluation of SKhainix's leadership in AI memory rather than a permanent change of throne.
I see, and the KOSPI climbed above the 9,000-point mark last week and continues a strong rally. So the big question now is whether it can continue to move higher. What are the key risks investors should be watching?
Now, KOSPI's move about the 9,000 point level shows strong momentum, but investors should be careful not to see this as a risk-free rally. The upside is still supported by semiconductor earnings expectations, especially around AI memory, HBM, and global chip demand. However, there are some risks to watch that. The first is earnings risk. If upcoming semiconductor results, including global indicators such as Micron's earnings, fail to confirm strong AI-related demand, the market could quickly lose momentum. And also perspective of macro risk, especially U.S. inflation and interest rates. If U.S. inflation remains sticky, expectations for rate cuts may weaken, or rate hike concerns could return. That would pressure high-growth technology stocks. And also market concentration. The recent KOSPI rally has been heavily led by large semiconductor names, while many other sectors have lagged behind. This means the index may look strong, but the market breadth is relatively narrow. So the KOSPI can move higher if semiconductor earnings remain strong and U.S. inflation data are favorable. But investors should watch for disappointment in chip earnings, higher for longer interest rates, and excessive concentration in a few AI-related stocks.
All right, in the foreign exchange market, the Korean won reached its weakest level against the dollar since the 1998 financial crisis. What's driving the Korean won's weakness, and is there any sign of relief ahead?
The weakness of the Korean won is being driven by both external and domestic factors. Externally, the U.S. dollar remains strong because inflation concerns have kept the Federal Reserve cautious about cutting interest rates. As long as U.S. rates stay high, capital tends to flow toward dollar assets, putting pressure on Asian currencies, including the Korean won. Domestically, Korea is also facing pressure from foreign investor outflows and concerns over import costs, especially energy. Even though Korea's semiconductor exports are improving, that has not been enough to fully offset the broader pressure from a strong dollar and global risk aversion. So there are some possible signs of relief. If U.S. inflation starts to ease and Federal becomes more open to rate cuts, the dollar could weaken. And also stronger semiconductor exports could also support Korea's trade balance and help stabilize the won. However, relief is likely to be gradual rather than immediate. Investors should watch three things closely: U.S. inflation data, the Federal's policy signals, and also whether the Korea's export recovery becomes broad enough to attract stable capital inflows.
I see. And more broadly, global oil prices have dropped after the U.S. and Iran signed the preliminary ceasefire deal. Yet fuel prices in Korea remain still very high. Why is this, and when can we expect prices to go down?
The reason Korean fuel prices remain high despite the sharp drop in global oil prices is mainly due to a time lag and the structure of domestic fuel pricing. First, the international oil prices do not immediately translate into pump prices. It usually takes about 2 to 3 weeks for changes in crude oil prices to be reflected in domestic retail fuel prices. Refineries and gas stations are still selling fuel that was purchased or refined when oil prices were higher. Also, the Korean fuel prices include a large fixed component such as taxes, distribution costs, and refining margins. So even when crude oil prices fall sharply, the final retail price does not fall by the same percentage. So fuel prices in Korea may begin to ease gradually over the next few weeks if lower oil prices remain stable. But a sharp and immediate drop is unlikely. So the consumers should expect a delayed and partial decline, not a one-to-one reflection of the fall in global oil prices.
I see. I guess we'll have to wait and see how that goes. All right, Professor Park, thank you so much for your time and insight this morning. We appreciate it.
Thank you.